Good afternoon, folks. It's Mark here at TapeTally.com for your Week 12 weekly recap. Let's jump right into it. This is going to be a short video, as you'll see that not too much happened in the markets this week. The SPI was down about 0.5% for this week. The Qs were up about half a percent. iShares Russell 2000. This kind of indicates the smaller cap stocks were down slightly. Dow Jones was down over 1%. Gold was up slightly on much lower volume, as we can see here. You look at the volume here for this week; it's quite low. So this is quite expected, actually. After this huge, large run, we're seeing a bit of a consolidation, sideways consolidation, or maybe even slight correction here. Actually, this would be quite healthy. I know it's not really popular to call for the market to pull back here, but a healthy bull market has pullbacks, and that's just a natural occurrence of the market structure. And it is a good thing because it shakes out the weak hands and those with the strong hands. A lot of money in the market who understand the market structure. It allows them to buy more. So it allows you to improve your risk-reward ratio on a lot of your setups. So we can just quickly run through this. The SPY here, like I said, just had kind of a nothing week, didn't really move inside week. Qs were up slightly. This is on the back of Apple continually going up. Sort of had a consolidation week as well. If you look at Apple here. It's way off of its trend line. I wouldn't touch this thing. If anything, I might be even shorting it. But right now, this is not really what you would classify as a typical blow-off top here. A blow-off top you'll see is a quick run-up, which we're having here, and then a large emotional week where the close is lower than the open. So we see here. This is not showing any major emotion yet. The volume was lower, and we closed higher than we did the previous week. So it's not that emotional yet. The Russell 2000, we can see here, couldn't break. I think on Wednesday it broke up above this little consolidation range right here, but could not close there for the week. Dow Jones fared a little bit worse. It was down over 1% this week, but once again, it's sort of expected after this run up from whatever $105 all the way up to 130. You have to expect a bit of a pullback. Gold, on the other hand, we saw it's coming up to its its upward trend line here, which is, we can play it for a bounce off the trend line like we did here. However, I think that the fact that it couldn't make a new high here, got stuck at this resistance level right here, that's not a good sign, and it could be possible that we're going to see a break of this trend line soon. That's what I would play for. United States Oil Fund didn't really see too much movement. The VIX once again is getting smashed on actually quite a bit of high volume, so we're short that currently here at TapeTally.com. If you go under the performance section, you'll see the strategy layout and the performance of that, and that's been doing quite well this year. The Canadian Index Fund, same kind of deal. We saw a bit of it was down actually 1.22% this week, which was more than the other indexes other than the VIX, but it was down. But we still have somewhat of a bullish pattern here. We're just kind of waiting for this consolidation to end here. So that's basically it for that index. Nothing really too exciting there. Let's go through the sector indexes. Once again, we see that consumer discretionary is going to be bumping up against its the upper channel line here. So we should expect it to either stall or pull back a bit. Consumer staples right in the middle of the channel here, so it continues upwards. we're sort of seeing a rising wedge pattern, which is a bearish pattern in some contexts. It depends where it's at, but these typically lead to a downward movement. So we'll see how that works, how that plays out. We are in the middle of the channel, so it could go either way. Energy did not have a great week. It broke down here. So on the back of some oil stocks, we did see like the USO was down, but it didn't break down as much as the XLE here. So that one is one to keep an eye on. We should see a bounce here eventually. XLF seems to be doing very well. It's about to break its channel here, so we can start drawing a new channel once it breaks that one. So we may do something like this. Draw a parallel line, and maybe we'll draw something like that eventually in this upward channel. We'll see how that plays out. Healthcare, once again, it's sort of stuck just above its halfway point in the channel, so I would say that that's neutral as well. Industrials here, stuck in its kind of in a neutral range. So as you can see, we go through these. A lot of these are either stuck in their neutral range, or they're consolidating, pulling back a bit after the large run up. So here we have the tech sector. This is mainly led by Apple. That company's gotten quite big with its price movement. So that's one to watch. Utilities, same kind of deal. It was bumping up against its upper trend line here, upper channel line, and we're seeing a bit of a consolidation or a pullback. So in general, you know, I'm still kind of neutral with a bullish bias. I do see a lot of stocks setting up nicely. A lot of the breakouts that we saw last week did not fare well after the breakouts, but that does not mean that, you know, that's the signaling of the end of the bull market. If we are going to enter into a large correction, a deep correction, we're going to see major distribution. So we're going to see stocks across the board go down, and I just haven't seen that through my scans and my view of the market. So for the time being, just remain bullish, but you know, with an emphasis on risk management. You need to be able to manage your risk. You can get aggressive once you start seeing, you know, those breakouts starting to hold. And yeah, that's about it. So have a great week.